Hi everyone, it's Evan here from the Trade Risk on Wednesday, October 11th here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Getting a head start on today's video. I got an appointment I got to run to right after the bell, so it's about 5 or so minutes before the market close at the time of recording this, so we're not going to get the exact final print, but unless we see some large event happen here at the last 5 minutes of the day, these charts should look pretty similar to what you'll see after the bell. So let's get in here to the S&P 500, the SPY ETF. We can see we are finishing up the day approximately 35 cents. That's good for 14 basis points higher. And if we look at the past several days here, you can see it's really, these ranges have just super compressed and it is extremely dull out there. There is no real intraday range to work with. If we look at where we started the week, we opened near the highs here of Friday, sold off to the lows, finishing down 42 cents here in the SPY. And you can see yesterday we kind of bounced back up, closed exactly where we opened, failed to go up, failed to go down. And then today we're getting a little more progress here to the upside, but extremely dull, boring action. If we look at the volume here, you can see extremely light volume. Probably I actually didn't do an exact comparison, but got to be one of the lowest 3-day weeks here, or 3-day start to a week here, lowest volume of this year. It's got to be pretty close. So volume's extremely light. We are moving sideways here. That is, it's constructive in the sense that we are, working off or at least digesting through time, moving sideways here from this breakout and run that we saw just a couple weeks ago. Bears, though, may speak to the complacency, the low volume, and speak to perhaps a topping pattern in the works here. But that thesis, we got to see some proof here. There's been zero selling pressure and zero evidence of really any aggressive sellers here. So we definitely would need some type of break of at least some of these short-term levels to jump on that camp. If we go to the weekly chart, you can see here, once again, we are just extending to all-time highs. This weekly chart still extremely strong. Note, though, the distance between where price is now and where this rising 8-period moving average is, and look back over time here and note that we don't generally like to be too far stretched from some of these fast moving averages here. On the weekly chart, we tend to get some reversion back to the mean when that happens. So be aware of that. I think that is still, speaks to the thesis that I've really been sharing over the past now week and a half of being selective with new exposure, understanding some of the ground that we've covered, not necessarily in the S&P 500 for specifically, but from individual stock basis and even sector basis. Understand that we did have a very strong sort of move higher in some of those names and sectors throughout the end of September into October. We're going to talk about them, and some of them are starting to digest and move sideways, very similar to the SPY here, which I could say is at least a constructive act happening. But, the thesis really is basically the same. Trends are still strong. Momentum is still pretty much strong across the board. Breadth not doing anything wrong, still holding up. There were some blips in there that we were picking apart and just looking at the sort of magnitude of this rally higher, but nothing really materialized there, and breadth is still holding up. There's still quite a bit of new highs being made each and every day, far outpacing new lows on the 52-week high basis. So things still look good, but don't be complacent. That's still sort of the thought process and advice that I would have here. We could look at lots of different metrics, just saying that there is complacency here in the market. So let's be aware of that. Understand that volatility is extraordinarily low. Maybe it's the new normal for now, but there will be some event that will expand these ranges beyond just 75-cent intraday ranges. And the timing of that, though, is sort of anybody's guess, but it will happen. So just make sure you're honoring those stops and have that risk management in place. So that's enough ramble there on the SPY. if we look at the IWM here, so here's some of that, kind of healthy, constructive sideways action through time that I am seeing. I am noting IWM covered a tremendous amount of ground here to the upside throughout August and September. And now the fact that we've gone sideways for 6 or 7 days here, that's starting to, be sort of welcoming on a potential continuation, or at least trying to get involved in this market, or have some upper levels to sort of put stops against and measure risk against. Build out that upper level structure. That's what I want to see here. So the IWM starting to do that. The 8-period moving average, as you can see here, the blue line on this chart has caught up to price. So I do like to see that. The volume, again, super low as it consolidates here. So let's just pay attention to it. But I think the IWM will be a good index to pay attention to into the end of the week. Let's see how we close out this week. And again, I have nothing wrong. I, in fact, encourage even longer consolidation here, even more sideways action to really set us up for that next move. So IWM putting in that consolidation, and if we go to the NASDAQ 100 here, you can see closing at all-time highs today. It's moved fairly sideways here, kind of like the S&P 500 has this week, but you can see on the weekly charts up 26 bips, and kind of the same similar action. Monday we had a little bit of a pause, yesterday a bit of a pause, and then today we're starting to get back to the upside again. So the Qs, super low volume here as well, so let's again just note that, but all things considered, 8 and 20 period rising moving average, it's below price, supporting price and rising. 146.55, 146.50, these old highs here from September, that's still a very sort of significant level I'm watching. As long as we're above here, I don't think, there's this is an innocent market, so to speak, as long as we're holding above this 146.50 level. If we start to break down here, especially abruptly on high volume, a sharp range expansion back below 146.50, that would be a bearish development. That would be a sign that something's changing. And again, you guys know, if you've listened to the past few videos, I'm most skeptical about the Qs here out of all of the indices, but it's tough to be too bearish right here. So long as we're above these moving averages, above this significant level, I think you got to respect that and continue to trail those stops, or honor this market if you're involved in it. So that's the Qs, that's the market environment. Let's quickly get through some of these others because I actually need to run here. So we'll go to TLT next. You can see if we go to the weekly chart, we're up 67 bips here on the week, so you can see pretty constructive action to start the week. We kind of washed out below this 124 level on Friday of last week on some higher volume, and you can see we're just kind of V-shaping higher here on light volume. So that's generally not a good sort of characteristic there to sell off on higher volume and then bounce higher in this kind of bear flag fashion into declining moving averages. So I'd still want to be cautious there. I do respect the fact that we are back below last week's lows, or at least this 124 level, I should say, but I'd still want to be cautious here. Let's let the bulls prove themselves a bit more in TLT before we get too excited trying to knife catch that or get involved in it. GLD and silver both getting some nice follow through to this reversal that staged on Friday, where we kind of undercut it. We talked about this nice reversal here where we had this outside reversal day where we sold off below 120, reversed, went green, and then closed near the highs. We've gotten follow through all this week so far. We're up 1.5%, nearly 1.5% in GLD. So again, I don't think it's an easy long here necessarily, but so far the bulls are sort of running with it here in the short term. And same thing with silver, getting progress from last week's reversal, outside reversal day on Friday, and holding up so far, trying to get that crossover back on those fast 8 and 20 period moving averages. A little bit of volume coming in here, and notably the volume was really there on Friday. So good developments there for the short, at least for the short term, hopefully, or maybe for the intermediate term as well on gold and silver. And if we look at USO, I mean, this thing's all over the place. This is just dancing around this line here, which I've been looking at, this 1030 level. So this is the highs from August, roughly speaking, and some of the highs here from September as we based out. We broke above it. I was constructive that we were above 1030 and had this nice expansion to the upside. Then we quickly kind of fell back below it. That's an ugly sort of development, falling back below these old highs, and now we're trying to get back above it again. So this thing, I am not looking to trade this. This is just pretty noisy, and I'm letting this settle out here. here. Generally speaking, this 1030 is still pretty much my line in the sand, but I'm not really going to be acting on it from any new trade opportunity. But I say the longer we can hold back above 1030, above these highs, above August highs, the more I would rather be on the optimistic bullish side than anything else. If we started to unravel back below 1030, I'd want to be cautious. So very simple. That's the line in the sand that I'm using. And natural gas, again, fairly noisy here. It made new lows this week. Actually, on Monday of this week, had a pretty ugly, 1.2% day to start the week off. But then it popped higher. We had this pop up again this morning, but then that sold off. So this thing's pretty messy in here as well, but it's flirting with yearly lows. If we're, as long as it can hold, I guess, above 620 or so, maybe this turns out to be some type of double bottom. This looks fairly messy right now. We're going to need more proof of that, but something to pay attention to. These are the lows from August. We're right above them now here in UNG, and we'll just want to see how this closes out the week and if it can stabilize and move forward, or if it just, in fact, rolls over. So that's UNG. I think that's everything there. As far as individual sectors go, and the other note I didn't make at the top of this video was earnings season is fast approach, is here. It's tomorrow, in fact, for some banks, financials. I think Citigroup is tomorrow, and there's got to be some more. I don't have the list in front of me, but I know banks are reporting tomorrow, so let's pay attention to that. We could get some developments or catalysts that emerge out of some of those reports tomorrow. Let's look at some sectors. Semiconductors just absolutely on fire here. Certainly kind of grinding or crawling, really accelerating over the past couple of days here, but had kind of stair-stepped its way above this $90 level, and then really starting to move here and back to all-time highs in the semiconductors. If we go to, yearly chart, that is what I wanted. 35% to the upside, so 35% in the semiconductor SMH ETF this year. So extraordinary performance there in semiconductors and technology. Right behind it, you can see trading at all-time highs here, really just pushing up and making some strong closes. Volumes light, but those are the leading stocks so far this week. And even utilities getting a pretty good bounce back this week as well, up 1.5% to start the week. So 3 days in on a boring sector like XLU, we had some big volume come in today. That's notable, but XLU, semiconductors, and technology all doing very well at holding us up so far this week and leading us to the upside. As far as some of those consolidations that I was talking about, XLE, so again, let's not sleep on this one here. This had this nice breakout from this multi-month down channel that it was in, and you can see here just moving sideways. This is good. This is healthy. I like that it's working off this 10-point move off of these, or not 10-point, about 7 or 8-point move off of these lows here in the XLE. So pay attention to that and some of those other individual components under the hood if you want to get involved in a second potential leg higher. So XLE putting in that consolidation, and financials maybe a little less so, but you can see over the past 4 days just getting tight, getting these moving averages to catch back up to it, but still holding on to this short-term trend. And then finally, XLV, which we talked about a little bit. It's a little bit choppy in here. We had a trade in this that we closed out this week where we got involved in it here on 2 Fridays ago. We sold half up here. We took the rest off on Monday, and we are no longer in this trade, but I still like XLV in general. In fact, most of the long exposure we have on right now is kind of concentrated in here or in this underlying or biotech specifically. So I still like select areas of this market, and we still have some of our long exposure kind of huddled in this area. So that's the recap for Wednesday, October 11th. Thanks so much for watching. If you guys are new here, do subscribe to our YouTube channel to stay up to date with all the latest videos we continue to put out. Thanks again for watching. Have a good day, and talk to you again soon.